Hello, I'm Sabina CPA. I advocate less taxes and more profits. Today, I'd like to talk about the do's and don'ts of IRS audit. Every year, the Internal Revenue Service audits a number of U.S. businesses. Knowing how to prepare for and handle an audit can minimize stress and even provide opportunity to improve company operations. In some cases, audits may even lead to smaller tax bills. 4 tips for an IRS business audit. Regardless of the types of IRS audit you and your business is involved in, be it correspondence, office, or field audit, the best way to deal with an audit is to know what to do and what not to do. Please consider the following. First is be professional. Do. Auditors have a job to do, and it's in your best interest to show them respect. If you're called to their office, show up on time, dress appropriately, and have requested document in hand. If auditor visit your place of business, encourage staff to answer questions honestly and completely. Within reason, it's acceptable to ask for more time to locate a particular record. If you can't find supporting documentation, say so. Don't argue with the auditor. Ask for clarification if needed, but don't question every document request. If you disagree with the auditor, state your case and understand you have appeal rights should the disagreement become costly. Secondly, be organized. Do. If you keep business records on a computer, know how to create and print easy-to-follow reports. Prepare for the audit by laying out checks, invoices, and other records in a logical fashion. Don't dump a box of receipts into an auditor's lap. The easier it is for an auditor to find what they need, the shorter the time period required to complete the audit. Remember, the longer an auditor spends with your record, the more likely he or she will find something amiss. Also keep in mind that it's rarely a good idea to create a record during an audit. Exceptions may be if you are honestly trying to reconstruct transactions from memory or your record don't exist. For example, after a natural disaster or fire. IRS agents are often suspicious of hastily prepared documents that smell of wet ink. Third, be honest. Do make a straightforward effort to justify deduction. If you can't locate a specific record, look for alternative ways to support your tax return. For example, if you're claiming a deduction for depreciation but can't locate the paperwork, redo the calculation for the auditor. A vendor, landlord, or mortgage company may have copies of pertinent records if yours have gone missing. Don't create numbers that can be corroborated or reasonably explained. Lastly, ask for help. Do get an expert in your corner if you are facing an audit. Don't ignore your need for help. Remember, auditors conduct audits all the time. This is a rare event for you. Too many businesses provide more information than is needed, opening themselves for a higher tax bill. Make sure this is not you. For U.S. businesses, tax audits are a fact of life. By knowing what to expect, you can be prepared if the IRS come knocking. If you find this video useful, please click on like, subscribe, and forward to those who may also benefit from this tutorial. Please also head to baycpaplus.com to sign up for our email newsletter full of tips for less taxes and more profits. Until next time, God bless.